It's a pleasure to be here, Kelly.
Is this stuff like a 5 or 10-year plan, or are we going to see you guys doing, fuel cells and that kind of thing like right now or in the months to come?
It's actually both. We have applications today for fuel cells and battery electric vehicle powertrains. And then we have a lot of work to do to make those same technologies viable for other applications. The largest volume applications, commercial trucks and things like that, I think are still a few years away. But there are a number of applications. You see them out on the road today, school buses, transit buses, trains today using both fuel cells and battery electric vehicle powertrains.
Sure. And typically these larger vehicles have been a trickier thing to take into batteries because of their size. So fuel cells obviously holds a lot of promise there. And it makes sense for a company like yours to be going in that direction. But there's a lot of companies that are trying to make this transition, and investors, some love it, some are a little uncomfortable. Talk through kind of capital and where that's going to be deployed between the business that's bringing in the cash and the business that's you see as the future.
It's a really interesting and important problem. Right now, climate change is the existential crisis of our time as leaders. We need to address the climate contributing gases that come from burning fuel. Commercial industrial vehicles burn fuel, a lot of it, and therefore contribute to climate change. So making our way through this transition is critical. It's critical for our way of life. It's critical for our children and our grandchildren. So we have to make moves to do that. Today, though, for many applications, it's just not economically viable. You may want to do it, but there isn't a simple way to do it. And that takes three things. We need infrastructure, so you need to have a place to charge or a place to fuel up with these new technologies. Second is it takes the technology development to make these vehicles work. That's the fuel cells and power and battery electric powertrains getting lower cost and more robust. And then third is it's the investment to get from this place to that place. And all aspects of the economy and government need to work together to make this transition.
Yeah.
And we need to start yesterday.
Yeah. Well said. So let me ask you about this. Industrial stocks are often a favorite of investors as we enter a rate cycle. We hear from a lot who think they're undervalued right now and a good place to be. Can you just give me the pulse from what are your clients saying? How do you perceive the strength of the economy in the industrial sector right now?
Right now, our customers are really busy. They are selling a lot of trucks. They could sell more if they could get enough components. So they are definitely looking for ways to build capacity and add production, more production today. Their demand exceeds their ability to produce. You know a lot about the chip shortages and other issues. So right now, if they could make more, they could sell more. So economy's strong. There's more demand. We're really in supply constraint situation rather than a demand constraint situation. Yeah.
And what about inflation, both the pressures that you're experiencing as a company and the price hikes that your customers should expect?
Both are happening. We're seeing inflation in all of our components of cost, labor, material costs, et cetera. We're passing some of those on to our customers. Some of those costs they're passing on to their customers. So we definitely see inflation throughout the economy, but demand remains strong despite that inflation.
Is inflation peaking?
Don't know. It's hard to say. I wish I knew the answer to that, Kelly, but I don't.
I thought maybe you would have a better sense. It's the million-dollar question we're all trying to figure out. We really appreciate it, Tom. Thank you so much for your time today.
Shepard Smith here. Thanks for watching CNBC on YouTube.